Welcome, Robert, to answer some questions we have and share some insights. So, Robert, we all know to increase the interest rate is to control the inflation rate. The interest increase happened last month was because the inflation had gone up again. There was another announcement to increase another quarter yesterday, even though the inflation had dropped since June. Is interest rate a successful tool to control inflation so far? And where do you see the rate will go within next 2 to 3 years?
Right, excellent, and good afternoon, everyone. Excellent question. I mean, it's quite timely to have this discussion today because the Bank of Canada, as you mentioned, moved again yesterday by another 0.25% increase in its policy rate, and that follows an increase in June. And at this point, inflation is, as you mentioned, is slowing down. The concern from the Bank of Canada, and it reiterated it again yesterday, was the fact that beyond just the headline inflation number that's now at 3.4%, down from a peak of 8.1% a year ago, the Bank of Canada looks at the core measures, other types of measures of inflation, where the picture is not quite as rosy in terms of the momentum in inflation. Those measures that say that inflation is running, or core inflation is running, somewhere closer to 4%, and then a little bit more than that, and that kind of stalled there over the last few months. So the Bank of Canada, this and the fact that indicators about the state of Canada's economy continue to be surprisingly strong at this stage, and the fact also that the housing market seemed at least this spring appeared to be starting to rebound. So altogether, those factors have led the bank to conclude that maybe it had not done enough, like up until earlier this year, to get inflation down to that 2% target on a sustained basis. So clearly, there's been some progress made on inflation, but the Bank of Canada is concerned that we might not get to 2% on a sustained basis by next year. So the idea, the goal of the bank moving again in June and July, is to get like that extra kind of tightening in monetary policy conditions to cool the economy down a little bit more, to get inflation down to that 2% target. But that's probably going to be by the end of 2024. So it's going to be, get to that 2% is not going to be done that quickly. The thing to keep in mind as well, and the reason why we think the Bank of Canada is done now to raise interest rate, is that it takes a long time for monetary policy. So when the Bank of Canada plays around with the interest rate, to have its full impact on the real economy and therefore inflation. So economists estimate it takes somewhere between 18 and 24 months to have that full impact. So the progress we've seen on inflation to date does not really reflect what the latest hikes in interest rate. They are more of a reflection of what has happened like months and months ago. So that's why we think that there's ultimately, the inflation will slow down, and then the Bank of Canada will not need to do any more hikes going forward. And by the probably early next year, we'll start starting to cut rates and no longer about raising rates, because inflation will be on its way to that 2% target.
Right. So since you mentioned inflation rate, and all the economists are like focusing on inflation. So we know that inflation is bad for economy. And if we look at the inflation impacts on our daily life, most people will see the increase in living costs on food, gas, groceries, and everything. If you compare the increased living cost and how much more people pay on mortgage interest, is the money we save on living cost good enough to cover the increased interest amount? If not, why the inflation is more important for decision makers. Based on the stats, the home ownership rate is around 66% in Canada. We talk about more than two-thirds of the population, which is not a small group, who will suffer from the high interest rate. And even though the inflation rate had dropped, we didn't see anything really become cheaper. Why is that?
Right. Let's just start with the last part of your question there, or comment. It's about what is inflation here. Inflation is the rate of price increase of the basket of goods and services that are part of the CPI, Consumer Price Index. And so it's the rate that relative to a year ago. Like when we say 3.4% inflation, it means that prices of goods and services are 3.4% higher than they were a year ago. When we talk about inflation coming down to 2%, does not mean that prices will decline, like price levels will decline. When you go to the grocery store, things are going to get cheaper. What it means is that price will continue to rise, but at a slower rate. So lower inflation does not mean lower prices. In some cases, that some components we've seen gasoline prices, for example, are down substantially from a year ago. But overall, the cost of living, as measured by the CPI, is still rising. Except what the Bank of Canada is trying to achieve is to slow it down to a 2% sustainable rate of increase over time. So to just want to clarify this for anyone who was hopefully, hoping to see the cost of living getting cheaper. It will not get cheaper. It will just not rise quite as fast. Now, what the Bank of Canada does when it sets its policy, it looks at inflation broadly, not just mortgage, people who pay mortgage, their mortgage, or the price of renting or the price of housing. It looks at the cost of prices at large in the economy in a very broadly based. So its policy, when it raises interest rates, for example, it is designed to cool aggregate demand. So demand for all the goods and services that are out there from consumers, but also from businesses, is trying to cool down that aggregate demand to line it up with our capacity to produce. Again, very broadly defined here. What is happening when you get inflation is that aggregate demand is too strong relative to your aggregate supply. So by the Bank of Canada raising interest rate, it's attempting to cool down that demand to light it up with supply. Now, its main channels, obviously using interest rate, your main transmission mechanism is through anything that's our loans, more or less, like that end up with that for people or businesses that pay interest rate. That's what monetary policy is. That when you play around with interest rate, this is what it's about. So when you say you got 2/3 of Canadians who own a home, or roughly speaking, it's true, but not 2/3 have a mortgage. It's in fact roughly 1/3 of Canadian households that have a mortgage. So you get that one third of let's say the population that's highly sensitive to higher interest rate, but you got still 2/3. At least 2/3 are not directly affected. I'm being very, very cautious here, because even those who own a home but with no mortgage are still indirectly, I guess, affected by higher interest rate, or directly if they have other forms of debt, either with a line of credit or what have you, or a car loan, for example. And the other third who are not owners, like renters, are also indirectly seeing an impact, and we've seen rent going up, not entirely because interest rates are rising, but that's part of the reason. You've got many landlords who have debt, for their investment property. They have to pay, they face higher interest rates, so their cost is rising, and they're trying to find ways to pass on at least part of that cost to tenants. So there's some direct effect there from that transmission of the monetary policy to a transmission mechanism to the real economy through basically debt service payments, and indirectly also through various other mechanisms.
Right. Thank you for that answer. Um, so I read the news and articles about why there was another interest increase in June. One of the leading reasons was that the real estate transaction was booming up. Like, correct me if I'm wrong, to decrease inflation rate is to make less money available in the market and get everybody to save money in banks. What happened to real estate market looks like going to the opposite direction. However, Canada tries to bring more immigrants within the next 5 years, but houses won't be built overnight. Ontario is short on housing already. To cool down the real estate market will make this situation even worse. So, what comments do you have regarding the interest increase versus a housing shortage?
Right. I mean, all right. There's many things in your question and statement, and we can unpack some of it. Fundamentally, the inflation problem is not just a housing issue here. It's a much broader, and as I just explained, it's more aggregate demand. So it's just like demand for shelter in whatever forms, and also for other goods and services. So it's kind of it's a broader issue. Although the shelter component of it is a fairly large one. And now, so the bank attempts to deal with that. Now, what was the other part of the question you had? Something on
Yeah, the housing policy and also the immigrants policy for the next 5 years.
Right. And so what the newcomers to Canada? Canada has increased its immigration target tremendously in recent years. It will continue to raise its immigration targets, or at least for the next couple of years. Now, it is exacerbating a problem that we have in terms of housing, a lack of housing, a shortage of housing supply. As you mentioned, in Ontario, we have a gap, and that's also true in other parts of Canada, but probably that gap is wider in Ontario, particularly in Toronto area. And that we know that the longer term solution to this is to increase our supply. So we need to build more. It will be challenging to build a lot more. Ontario is hoping to get 1.5 million new units over the next decade. So that effectively represents a 50%, that's 50% increase relative to the prior 10 years. So that's a very ambitious plan. Now, the challenge will be on the production, on construction constraints, and constraints on many levels there. Will a home builder be able to deliver that many units over the coming years? And it is an open question, right? Considering the labor shortages that we have right now, the construction costs that have shot through the roof, especially over the past couple of years, but that predates that as well. And also the various rules and regulations around housing construction, whether it's zoning, whether it's the approval process, lengthy approval process, or it's the development charges, you name it. They all kind of form a series of constraints that are in the way of building more. Now, there's been some progress on some of those issues, but we'll need a lot more progress going forward if we are able to become able to balance the housing market to meet future demand, let alone narrowing the current gap. So, but to me, it remains an open question. So what does that mean if we fail to have more housing, build more housing units over the coming years? Is that the pressure will remain very intense on the current housing stock, or the housing stock will have in the coming years, which means that the price pressure that we've seen even going prior to the pandemic, will unlikely to ease in the coming years. So if we think about affordability and how much it has deteriorated, especially during the pandemic, but even before that, this is going to be a major challenge going forward. So to me, it comes down to Ontario's and Canada's ability to build a lot more very quickly to ease those pressures. And
Right.
the entire spectrum of housing here. It's not just ownership. We can do a lot. We need to do a lot more on the purpose-built rentals, and also a lot more also on the affordable housing end of the scale as well.
Right. Since you mentioned the building cost surged over 50%, then I have a question like about the price, because I saw like a lot of articles saying the economists predict the real estate sale price will continue to go down, especially after yesterday's announcement, and the prices gonna be expected to drop by a certain percentage. Is it for the overall real estate market or for resale mainly? Because for new home industry, like you mentioned, home building costs have surged over 50% since pandemic began. We are part of this industry and we see this happened. It's not a really realistic prediction for new home industry unless the main issues are being dealt with. But so far, there's no really effective solution to deal with any of those main issues. And what do you think?
I agree with what you're saying. I think we don't. First of all, maybe the forecasters or analysts out there have changed their views in terms of pricing, but the home prices started to rise through the spring, which surprised us to a certain extent, but nonetheless, they've started to rise again, and we don't see them coming back down going forward. Probably our view is that home prices are unlikely to continue rising in the same pace as what we've seen over the last 2 or 3 months, but they will continue to rise in any case, at least in as part of our base case forecast, but very gradually. So no, we don't expect prices to drop. Now, and part like the housing, the construction cost is part of that equation. And the other part is that we don't see the market being rebalanced anytime soon. So this would maintain some upward pressure on price. Right now, I think and for the next little while, what will hold back the pace of price increases is the fact that housing market is incredibly unaffordable for a lot of potential buyers that are out there. And that we see this as a major impediment for prices to rise very quickly. But our view is that once interest rate will start to drop, which is probably a 2024 story and probably the spring of 2024 onwards, that as the interest rate start to decline, it will potentially help improve affordability to a certain extent, and this will allow more buyers into the market at that point.
Great. And then I want to go back to the immigrants question a little bit. So studies indicate that new immigrants won't be the main home purchasers, but they're going to be renters. So local investors will be the main home suppliers. However, in the current market, all policies do not seem to support investors, such as the interest increase, the capped increase on the rents, etc. What do you think? If investors do not invest in real estate, what will happen to the whole real estate market, and is it good or bad for the industry?
Well, I mean, what will happen is what we're seeing happening now is that rent is going up very, very fast. Again, this morning we've seen some news stories around once again confirming that the rate of rent increases is very strong, not just in Ontario, but pretty much across most of Canada. We have very, very low vacancy rates in the rental markets. Again, it's not just a GTA story or an Ontario story. This is pretty much a coast-to-coast story. And this will, because it's a market system playing out here. You got and you've got like more demand than supply. Prices move up. Prices here are red, and then that attracts. Eventually, will attract more. It will make it financially, I guess, possible or attractive to invest more into the rental, whether it is purpose built or whether it is condo investors renting out their units. The only thing there is that this will not really address our affordability issue, and that's my main concern. And this is where I think there's tremendous risk for the younger generations coming in to the market, that they pay, even those with like professionals with good income, will have a very hard time coming up with a down payment to go into ownership, right? And then move up the housing ladder. This is being a big impediment on that movement up on the housing ladder.
Right. And then we all know that in a long term, real estate price will always go up. One of the driven factor is the growing cost on materials.
Can I stop you there? Can I stop you there just a second? And
yeah.
It's just like the fact that it's been happening for a long time. I'm sure I can find some examples where the housing market, where prices have not gone up forever, and it has been the case in Ontario, in particular in GTA, because the demand has been very, very strong. So we're taking it for granted that home prices will always go up. I would just guard you against that notion that this is one of those, like a law of gravity or something. Prices will always go up. It's just like, as long as people will want to move into Ontario and GTA in very large number, yes, that's probably going to be the case if we're not able to solve the supply side. But it's not. Let's be sure here that it's not a guarantee, because it happened over the last quarter century does not mean it will be the same thing going over the next quarter century.
Right.
Sorry, I just didn't want to catch you before you went on.
Yeah, I totally get that. It really depends on location. Like you said, it has something to do with the economic side of that, like local development and job opportunities. It's very complicated. So it's actually a false comment that I just made earlier. But then, so for like the overall market, where do you see the real estate market will go for next 5 years? Are we now at a peak or bottom within the next 3 or 5 years?
I think that we have, from a cyclical point of view, we've reached the bottom. This spring was the bottom of this cycle, and going forward, our view is that at like phase one, despite what we saw this spring, it looked like a fairly strong, fairly vigorous rebound. We think it's going to be a slow grind in phase one until we're going to see interest rates starting to come down, and then the market's going to take off more. And then over the medium term, let's say from 2 to 5 years from now, and again, I'm going back here, unless we find a way to build a lot more, the market is likely to start overheating again and be very, very tight going forward. Maybe we'll find a secret sauce to get a lot more construction out there. If we do, then we might see something that's a bit more kind of a more gradual pace of increase in prices, for example. But otherwise, I think we are at risk of seeing prices move faster than many buyers will be able to handle.
Right. So I know we talk about property investment today, but actually property investment is just one of many investments that all investors can make. So in the current market, what kind of investment would you suggest making a short term and a long term?
Right. I'm not in the business of providing advice. And in fact, I'm not permitted to provide advice. All I'm gonna say is it's always been a very prudent approach to be diversified, whether it is in stock market, bond markets, real estate, just like because some investment have been very successful in the past does not guarantee that they will be in the future. So to me, it makes much more sense to have a very kind of a diversified approach to one's portfolio and very broadly defined. And I'm just kind of leave it at that.
Great. So I think I already hit all the questions I have for you. Do you have any other topics that you want to address?
Let me maybe just make one last comment here on housing supply, because as you kind of guessed, it is pretty much at the center of this housing discussion and concern, and very alarming situation in many parts of Canada. And I will say this, I am encouraged to see that at least finally all levels of government are now aligned to recognize that the longer term, more sustainable solution lies on the supply side. We need to build a lot more, like I said, a lot more of everything. And I would say, and I would hope that there's a great effort being done to remove obstacles to build purpose-built rentals, because Canada, really needs that. In some parts of Canada, needs to grow that stock, that rental stock. So at least there's been some progress. Now we need a lot more progress going forward. I'm thinking, for example, in Ontario, I'm pleased to see with many of the measures that the provincial government has done. I'm pleased to see that some of what the City of Toronto has done more recently with respect to zoning, for example, that has been a no-go zone, if you allow the pun here, for the longest time. It looks like there is some movement, and I would say a bit more of an open mind about addressing those issues and NIMBYism, etc. So I think there's a shift taking place here, at least from a policy perspective, for that. But like I said, construction costs are high. There's just still many obstacles along the way. But I'm encouraged to see that at least there is some kind of consensus that has built now, that we need really to focus on building a lot more.
Great. Thank you so much, Robert, for the insights.